Hello and welcome to this special Diwali program. It's that time of the year, it's festive, it's bright, it's all colors, and of course it's a period of anticipation as well. Anticipation for better things as compared to what has just gone by. At the outset, I want to wish all our viewers a very happy Diwali from the entire CNBC-TV18 team. We are coming to you live, by the way. You can see the decoration around from the Motilal Oswal Towers here in the heart of Mumbai. The next year, Samvat 2018, is expected to be dominated by two things, rates and politics, Powell and politics, as some have put it. And who better to then put some of these questions to in terms of how this will impact your portfolios, these big, broad themes will impact your portfolio to two real heavyweights. How to pack a punch into your portfolio, that's the question we're going to focus on and answer in various ways here over the next 20, 30 minutes or so. So let me welcome in our esteemed panel. Raamdeo Agrawal needs no introduction. Raamdeo ji, of course, is Chairman of Motilal Oswal Financial Services. Manish Chokhani needs no introduction as well. He's, of course, Director at Enam Holdings. Happy Diwali to both of you, to your families, to your teams.
And the entire TV18 team and all the investors.
Thank you very much. Let's just start there at the slightly top level, 30,000 feet. Are these going to be the big talking points as we enter the new Samvat, which is interest rates, and the question whether interest rates globally have peaked and we are entering a cutting cycle now, and politics, because there are state elections and, of course, the big general elections next year. I just want to start with that. Raamdeo ji.
Yeah. So interest rate cycle has peaked out. I think it's a too big a statement to say. I mean, yes, there looks to be some kind of a pause right now. But to say that it has been picked up, I have no view on this interest rate cycle. But one thing is for sure that what we have seen last 10, 15 years of sub-zero or zero kind of a thing where 12, 15, 13 trillion dollars of bonds, particularly in Europe, went below zero. So that era is over. You know, what started in 80s from 15, 16% 10 year to zero. I think that one phase in pendulum is done. And now, as Howard Marks says, you know, pendulum moves all the way up. So from zero we have come to 5.5%. Whatever happens, I don't know, but it is definitely not going to go back to zero immediately.
And this is the extreme, the other end of the pendulum, 5.
I don't know.
It can swing more.
You don't know. I mean, that's what I'm saying. When you said that we have peaked out, I don't know.
Okay.
So what I'm saying is that for sure, even 5% is not what the world is designed for. You know, world is designed for 1 or 2% types.
Yeah.
So I think it is an era of little more expensive money, little tighter money, and it will have its own repercussion. Like what we are seeing, that FIs are continuously selling because they are finding far more attractive opportunity in the debt side out there. I would think that high multiple companies will come down here also.
Okay. Manish, two questions. One is, there has been no price to be paid so far. You've not had a price to pay, right? I mean, last cycle we had a big price to pay in 2008 because we had 450 basis points of tightening. This cycle we had about that much, 475 basis points from where we started to now. I'm talking about the Fed rates. Markets are okay, I mean, right? I mean, by and large. So that is one. Second, if, as Raamdeo ji also said, we don't know if rates are at a peak and they start to come down, will that unleash a gush of liquidity into equities, into markets like India? Go on.
So let's separate the two out. So first, fundamentally, what you're saying is right, that the rate cycle is not yet peaked. And in fact, Jamie Dimon is on record to say he expects it to go to 7%.
7%.
The fact is, this time the pain has been taken by the central bank because they've subsidized all these fellows where the rate increases have not affected them. Because people have booked their mortgages and passed on the pain to the effectively the National Housing Board in the US. And the central banks actually are technically all bankrupt. And while they are trying to tighten, the fiscal side is as loose as ever. So the US government is printing money like no tomorrow. They have an interest burden now, which is $1 trillion a year, which is 4-5% of GDP for a country whose collection is 9. And this is the best economy in the world. So how Japan has been bankrupt for the last 30 years and slowly decaying, the same thing has happened to UK, the same thing has happened to Europe, it's happening to US. So I call this the Japanification of the developed world.
But they don't have the US dollar. None of the other countries have the dollar.
You know,
So just-
we call it the pirate plank. When you walk off the ship on the plank, until that Minsky moment comes, and then you suddenly splash into the water, you feel things are fine. So I think that moment is going to come, and there will be massive disruption, in my mind, in the currency markets, which will be sparked by a bond market event.
In this
in the
year,
developed
in our
world.
lifetimes, in near term, long term?
I think it's closer than it ever was.
Acha, okay.
And the, how do you call, the canary in the coal mine to me is United Kingdom, which has gotten out of Brexit.
Right.
That currency has no business to be whatever 100 to the rupee. And you see, even when Tata goes with a $300-400 million investment, the Prime Minister is standing in attendance. So it's telling you there's difficulty there. The way the Japanese yen has collapsed is telling you there's trouble coming. The good news is you are the only large economy in the world.
By the way,
India.
it doesn't have to come if rates have peaked and we start at some point, rates start to go down, right? It doesn't have to happen.
So, well, that was one reason why people were selling banks in India as well. Because if you think rates are going up and I'm going to lose on bonds, so they were selling financials globally and they just followed that trade over here. And each time my friends from abroad say India is expensive, I say, let me show you a menu of my biggest sector is banking, which is 30% of the index. You can start with a 5p for Canara Bank, 6p for Bank of Baroda, 7p for PNB, 8p for SBI, which is my largest bank. 11p I can give you Axis Bank and IndusInd Bank. And my best banks are HDFC and ICICI, which are on less than 15. So if you think this market is expensive and these guys are all compounding at 18-20%, there's something wrong with you. Post the general election, and assuming things are all steady,
That's what I'm going to get into
if we
politics.
don't get 100 billion a year, I would be very, very surprised.
Okay.
And I do think in this decade, we will be the bubble market
Okay.
of the world.
100 billion per year.
Per
FI.
year, will no.
FDI.
I said FII
FI
plus
plus
debt plus FDI. Cumulative inflow. So your balance of payment problems and the rupee depreciation is gone.
Okay.
You are the momentum market going forward in this decade. The way the world flipped on Japan with one trade of Buffett, because everyone's acting like lemming. There is a single trade, single dimensional investing going on. I think we are setting ourselves up for that.
Okay.
It's still away. I mean, let's get the May election out of the way and
You
then
know,
we
I-
see.
Quickly, I want to get this election business out of the way. Is continuity in the price, Raamdeo ji? I mean, everybody is expecting mostly that there will be continuity, right? And is that a risk in your opinion? And how much?
There is always 0.01%. You know, somebody said if Modi doesn't come, then market will fall by 25%.
I
Okay.
think it was Chris Wood
No,
or
just you know who said. What I'm saying is that probability is 1%. What happens if he comes? That is 99%. So then market goes up by 25%. So you are losing how much? 24.5%. So the payoff metrics is more like 25% up rather than 25% down. So you know there are a lot of ways of the mind is very difficult to figure out the probabilities of the events. You know, so the probability of the continuity going away is very low.
Yeah, yeah.
At least the way things look right now. So I think, but then event is event. Let the event be over. On 7th December, one event will be over. And then I think the rally could start immediately after 7th December election. Because
depending
then,
on the outcome or irrespective? Or
Irrespective.
Irrespective.
I mean, if it is very bad outcome, then market may correct a little bit and then the rally will start.
You think we will have a rally into general elections?
Yes. Because this is what happened in October 2014.
Okay.
I mean, the moment in Goa, Mr. Modi was nominated as a Prime Minister candidate, I think the market actually rallied before the election. After that,
Rally
really
started
did.
in October 2014 to 13.
13, yeah.
The move-
October 13 to 14.
Yeah.
So that is the kind of a timeline we have this time.
Okay.
I don't know what the market does, but my sense is that depending on the result and the mood, we could rally.
Manish, do you agree?
Locals are long, the foreigners are short, and that's how it's comprising the market. So clearly the locals have voted that we think there's a great outcome ahead of us. And if there is something unexpected, then
But do
obviously
you think FIs
you have
are,
to, you
FIs
have
are
to
more
realize.
circumspect? I mean,
FIs are circumspect. FI money has been still going out. Even last month we lost $2 billion there. We are matched by local flows. FDI still, despite the...
and do you think it's connected directly to
look, if you don't get the same government or you get it in a different combination, the market has to pause and reassess and reprice. So it's not like the world doesn't end.
the local macro story is solid, right? Because that is the bigger thing, and then there are businesses you got to pick. That remains, to your mind, solid, irrespective of
It is
elections.
becoming
And
solider, I would say, by the day.
Of course.
I mean, as the trickle down happens post COVID recovery, started K-shaped recovery. The big guys did very well. I mean, big houses are selling, small houses are not selling, big cars are selling, motorcycles are not selling. But I think this season we'll get to know in December numbers. I think there is a recovery at the bottom of the pyramid, and government has again extended the free food for next 5 years. So I think the pain in the bottom of the pyramid is real. I was talking to a few FMCG companies. They are saying the pain is real and volume recovery is very slow. So clearly the real boom will come when the bottom of the pyramid starts
The mass
consuming,
starts to pick up
the
in a big
mass,
way as
the
well.
last, the 60-70% of the population, when they start feeling comfortable, maybe the inflation is hurting them. So somewhere there is something
But you're
missing.
starting to sense that is happening, or
So there is somewhat it is better than what it was 6 months back, but it's not still what you're seeing on the upper end. You're not seeing on the lower end.
lower end. Manish?
No, I agree with him that so-called K-shaped recovery is probably a reality, and that's why the nervousness on elections. That if they lose and then you start having what they call giveaways, that's also the fear which has been impacting the banking sector, for example. That then your rate cycle, inflation are all pushed out to that extent. Having said all that, look, elections are an event which will get out of the way, and the market will rally post that once it digests. So you may fall 10%, 5%, whatever, if things don't work out. But like he said, if events are working out as expected, it'll get you to a point where again it will look expensive.
Correct.
From where it will get super expensive.
We have to take a break, but before I take a break, tell me 3 or 4 themes, and we'll take a break, come back, and we'll discuss those themes. So the 3 themes, Raamdeo, which you're very bullish on.
So I think the decadal or multi-decadal trend is fossil to non-fossil.
Okay.
Then you have the IC to EV.
Okay.
Then you have the super cycle of your real estate.
Right. Financialization has been
Then
something
financialization of the savings.
Okay.
I think for us closer home,
Okay.
financialization of savings will have a huge effect on the economy also.
Got it. So we'll discuss this. Manish?
You wake me up morning, night, I will say whether it's household sector, capex sector, infrastructure sector, the intersection is all financial.
I have to take a quick break, so let's do that. Take a quick commercial break here. We are back with you in just a bit with both Raamdeo ji and Manish Chokhani in a bit. Welcome back. We're in conversation with Raamdeo Agrawal, Chairman of Motilal Oswal Financial Services, and Manish Chokhani, Director at Enam Holdings. We got a top-down 30,000 feet, not 30,000, maybe 15, 10,000 feet view about what the market macros, the political aspect is looking like, and what kind of implications that could have. Let's dig it down deeper into what they like and what they really like in that sense. Gentlemen, great to have both of you here once again. Banks and financials. I want to start with that. And Manish, you are a big votary of that. You were just telling us what you tell foreigners when they say that market is expensive.
Look, take the underlying thesis. If you're a 4 trillion thereabouts
First,
economy.
Private or public?
I'm coming to that. Give me a second. If you're a $4 trillion odd GDP and you save roughly 25%, you're saving $1 trillion a year. Unlike the developed world, which is soon becoming emerging markets, we are becoming the developed world. If you save $1 trillion a year and we are still putting half of it into fixed assets like gold and real estate. So we haven't yet financialized that. So your trillion is going to grow and your share to financials is going to grow. Within the current $500 billion, we are putting 25 billion into equities, which is 4% of your 4% or 5% of your saving number. That number has to grow. Banks, which we think at 150 billion of deposits, we are kind of petering out, and how will you get CASA, and all funny arguments come. The amount of money which is going to go into financials is just so staggering that whether now it's a bank, whether it's a capital market player, whether it's a stock exchange, which you've seen what's been going on with BSE, MCX, and just watch what happens when NSE lists over here. So there is so much plethora of options over here that you pick. Like I gave you a menu, you think public sector banks, are they going to repeat mistakes which they made 10 years ago? I don't think so. With credit bureaus coming, with the people making 17-18% ROIs, they can't be trading at half-time book. And if there's a cycle ahead of you, all the people who dismiss PSUs, they all are holding defense stocks, railway stocks, power stocks, best performers of last year.
And Raamdeo, you always talked about the huge deluge of financialization, demat, people coming into the capital markets, and it's picked up in a huge way after COVID, right? So which are the top ideas there? I mean, because there are so many different things, right?
Yeah, so fortunately, it is a financialization part, but the intermediaries, they are driven by digital business model because you cannot handle millions of guys physically. Okay, so it's all through the digital platforms. So whether you see the broking platforms, I mean, I remember in 87 when we started, 200 crores was the daily turnover. And there were 500 brokers, and that settlement used to be painful on T plus 15. And actually the settlement used to happen in T plus 21. Okay. So that was the kind of thing. And now you're talking about T plus 1 and probably 0. T plus 1. And what is the turnover today? It is 250 lakh crores per day. I have not seen any industry which has expanded 1 lakh time in 30 years. There is no industry. And it's still growing. It's not that it's ended. Even the current year growth is about 50-60%. So I think it is unprecedented what is happening.
So exchanges?
Everything, let me tell you. First, the guy comes in. Okay, he comes in with a very 50,000, 1 lakh kind of a booty. He wants to experience. He's touching the water. He's just touching the water. And then he has a lot behind. Now, it is a tsunami kind of thing. See, you had a 30 million in 75 years. And 130 million in post-COVID, in 4 years. Now, the run rate is 3 million per month. You can do your numbers. We are headed to become 500 million demat accounts in next 10 to 12 years. And it's a journey. Okay. Now, what happens is, just the demat accounts cannot do the markets. What you need is underlying corporate earnings. So, if the corporate earnings cycle, after a long time, it is revived and it is on upgrades. So, if by my corporate earnings grow at about 15-17%, and these guys, they make anywhere between 12 to 15%, forget about 20-25, 12-13%. It is way above the fixed income.
I'm rushing you, sorry, but that only because of the paucity of time. Zomato is a big holding, and disclosure, this is not a recommendation for our viewers to go out and buy, but this is just for educational purposes more than anything else. Why do you like it in such a big way?
I mean, they have not made money. They are just going to start making money. And mind you, they don't have any balance sheet. It's only P&L.
Right.
So everything is written off. Correct. So your ROIs are going to be like 50, 60, 100%. So once you have, see, in valuation, I mean, unfortunately, we do too much of these tables and all. So when you have a high ROE and high growth, see, the P multiples are not going to be 20, 30, 40. You're talking about 100, 150, 200.
P multiples?
Yes.
तो क्या हो सकता है Zomato
अभी
आपके हिसाब से
अभी और क्या बोले अभी और क्या बोले बताइए
I think
it's not about
going to be a big contributor to that.
I am on a QSR board, so I'm very happy to hear that they are putting more riders in. We can deliver a lot more.
I think it's going to be a big contributor to Raamdeo's 10x. You said 10x or 100x?
No, I do think in India, look, it's a question of where will you sit to take the ride.
Right. Yeah.
Because as long as you are convinced on the business in a bull market, you can't keep changing your horses.
Correct.
So if this cycle is going to run for a longer period of time for the economy as well as for markets, if I understand financials, I deserve to make money there, not somewhere else.
Correct.
If he understands, wherever he's investing, he deserves to make money there.
One other segment, real estate, you're very bullish on. I mean, again, it's out there. I mean, we just have to look around, right? The amount of real estate construction, the pace at which it is getting sold, price increases which are happening, getting absorbed easily, interest rates where they are, but no slowdown in sales. Just talk to us a little bit about that, Raamdeo.
I just read while coming in the newspaper, in Singapore, the house prices have peaked out after 7 years of relentless rise. My sense is we have 10 years ahead of real estate story. It's just about 1 or 2 years. I mean, I think the bottom was COVID time, just pre-COVID and or COVID time. And government had to give a concession for the stamp duty and all. I think 21. In 21 there was a concession.
I think the last
21.
week in cities like Bombay,
concession
prices
was in 21.
COVID time.
COVID time, no? So 21 or 22, it bottomed. Like 21, it bottomed. So this is just about a year. This is just about the beginning of the real estate cycle. I think the issue is that it is going to be huge, long and vertical. The issue is that how does the this so-called real estate companies, they play it out. I mean, how ethical they are. I mean, of course, with the RERA and all, far more cleaner accounts will be there. How they play, how they remain disciplined. They get over-leveraged on the way. Somewhere they become over-leveraged and they end up they spread their resources thin.
कि बाजार में भाव और भाव, as in price and emotion, if you get those two aligned, that's only when you make money. So don't get over-exuberant, because it is a fact also that you pay a very high price for a cheery consensus.
Correct.
So right now we are all in a good mood. India is doing well and the prices are reflecting that. So look for things where there is little pessimism. For example, that's why I gave you banking. There's so much pessimism. It's going to die. The cycle is over.
Yes.
That's why it's interesting.
Yeah.
So if you get the price and the emotion cycle aligned, I don't buy things where they are over exuberant or this whole narrative is going on, stories are going on. In momentum, they make tremendous money. But as a value investor, it's very hard to hold on to the coattails and take the ride. So that becomes technical.
I want to let's end with things which are in exuberant zone, where there is cheery consensus. Manish.
So
Two or
first
three-
of all,
two or three areas.
I think the developed world, this belief that US can do no wrong and the dollar, almighty dollar, will forever rule. I think our underlying assumptions are going to change.
Okay.
Like it happened with that era of zero interest rates, infinite multiples has changed. There's a regime change. I think that is here to stay.
Okay.
This decade normally should tend to be the decade of value, not of momentum. And I think that change, when we talk of real estate, we talk of commodities, we talk of hard assets. Manufacturing is a huge theme in India. I think there is a regime change happening over there.
Where is exuberant pockets?
In our market, I don't think yet. I find it's crazy in the SME exchange, for example. It's like the new Calcutta Stock Exchange, sorry to say that. But the stuff which is happening there, what is happening on the options trading side of the market, I think people are a bit carried away there. And, corrections, something is good if things take place over there.
Ramji, exuberance, where do you see it?
Exuberance, yeah, I mean, the kind of
crazy.
option volumes and the oversubscriptions and all, I mean, that scares you. Like, established banks are about 15, 16 multiples, and the guys who, I mean, literally they are just about born. And the kind of, so that exuberance in the, some segments of small and mid cap, and including SMEs and all, that is a little scary. And that will leave very bad test. So what I'm more concerned about is that when a lot of people are coming, they should not be accident.
Yeah.
Because I want 500 million people to come in the market.
And then stay.
And stay,
invest and
of
grow.
course. Invest, stay, invest and make a lot of money.
Yeah.
And that's good for the nation. I mean, that's how the real money will move. Savings will move to the real economy. And then, that circle, you see, is going to be very, very rewarding. And it will be secular. I mean, when the economists will say 6%, you see what is happening with the GDP growth rate also. I don't think, today I think S&P or somebody has upgraded, they said 6.3 for this year and 6.9% for 24-25, which is first number I've seen for 24. If by chance it is 7% next year, I don't think it is there in the price.
Got it. Gentlemen, great speaking with both of you. Wishing both of you, your families, a very happy Diwali once again from all of us here. Thank you very much for joining us.
Thank you. Thanks for having us.
Thank you.
Wish all of you and the viewers very, very happy.
Thanks
Diwali.
very much. Thank you.